The economy in the US is doing well, but you just got to be a little bit careful about it's doing well, but it doesn't mean you need to just buy stocks and, hey, boom, away you go.
Yeah.
It's all the stuff that I know from market cycles, so I'm just looking at it going, oh, dear. Now, admittedly, they were on special, right?
Well, you look at this now and go, okay, do we think that this will continue at this rate for the next 10 years? And if you look at it and say yes, then you're
an idiot.
So you might have another 6 months or a year. We might be 2 years if we extrapolate it out. Yeah. But if we're investing over the next 10 years, there's just no way it's not going to fall.
Yeah.
That's right.
I think it's important to reiterate too, at no point are we saying don't hold stocks. We're just saying be careful with your allocation. Don't have all your eggs in one basket that is hanging on by a few threads.
Or if you're going to buy a stock, you want to make sure it's seriously cheap, and you also want to be able to allocate properly. I said allocate properly. So, even if you find a cheap stock and you've got 20 grand, you don't go, right, beauty, in for 20 grand. Because as Howard Marks said, and as I think it's one of the slides we use in Market Cycles, I think, where Howard says, look, if you buy a cheap stock in an expensive market, you're being a little bit hubristic, right? He's sort of saying, listen, if you really think that, everyone else's stocks are going to fall but not yours, it's going to rise, generally not the way it happens, right? Yeah. So you might, I often personally, what I do is I take an opener. So I might take 25%, and then if it falls, I'll buy, I'm comfortable buying more.
Mm-hmm. Yeah, that makes a lot of sense. Just in periods like this, right, I know the thing that you teach Jacob and I when we're reviewing what we've got is you just make us rebalance a little bit more often.
Yeah.
If something's done really, really well, make sure you're taking some money off the table.
Yep.